Welcome back to The Explainer. Today, we are looking at a massive transformation happening right now in how we manage our wealth. We are rapidly shifting away from the days of sitting down and manually balancing checkbooks, and we're entering this incredible era of predictive, automated financial ecosystems. Think smartphones, artificial intelligence, and digital banking all working together. It is a complete revolution in how we save, invest, and ultimately build security in the modern economy. Okay, let's dive into this. Here is our roadmap for today. First, we'll look at the digital finance shift. Second, AI and automated systems. Third, a real-world example to ground it all. Fourth, the risks and privacy trade-offs. And finally, some action steps for today. Part 1. The digital finance shift, from reactive to predictive. Let's be honest, traditional finance was incredibly manual. It required constant active willpower, branch visits, and it was honestly pretty stressful just trying to stay on top of everything. Today, AI-era finance gives you 24/7 digital access. Tasks that literally used to take an entire afternoon now take a few taps on your phone. But it's way more than just speed, right? This digital era uses predictive insights and automated transfers to do the heavy lifting for you. It's completely replacing those outdated, stressful banking habits with highly personalized, always-on financial products. So, what does this actually mean for us? Well, we're moving from a system that says, here is your financial data, to one that says, here is what your financial data actually means. Traditional tools just handed you a list of your transactions. Now, an AI financial assistant goes so much further by actively analyzing your specific patterns. Imagine an American worker earning $70,000 a year. An AI-powered app doesn't just show them a boring list of their expenses. It notices, hey, you're spending significantly more on restaurants and random subscriptions than similar households. It flags that pattern and generates a personalized recommendation to help them cut back. That level of deep personalization is absolutely the true game changer here. Let's move to part 2 and see how this builds. AI and automated systems, the mechanics of automation. We all know saving money is important, but let's face it, maintaining that habit is incredibly difficult. Automation solves this very human behavioral problem by moving your money before you ever even have the opportunity to spend it. This is brilliant because it entirely removes the burden of making a new, difficult decision to save every single month. By relying on a system rather than just your own sheer willpower, you are essentially tricking yourself into financial discipline. Let's anchor the math here to see just how powerful this really is. Say you set up an automated transfer of just $300 from every paycheck straight into a savings account. Over 1 year, that is $3,600. Over 5 years, that simple automated background routine equals $18,000. And no wait, that is even before calculating a single cent of interest. You accumulated $18,000 without ever having to consciously decide to transfer that money month after month. It just happens. And this exact same principle applies to automated investing. We're seeing a massive rise in robo-advisors right now. These automated platforms don't just pick random stocks. They actually automatically construct and rebalance diversified portfolios based on 3 specific data points: your age, your risk tolerance, and your timeline for needing the money. So, for a young investor who's saving for retirement, the system regularly invests a fixed percentage of each paycheck into a diversified portfolio, and it'll potentially adjust that portfolio all on its own as the investor's circumstances change over time. And this brilliantly illustrates our next point. Part 3, a real-world example. Meet Sarah. Let's meet Sarah. She's a 29-year-old marketing professional earning $75,000 a year. Now, Sarah used to manage her money the traditional manual way. And because she relied purely on willpower and having to make active decisions all the time, she frequently found herself at the end of the month having saved way less than she originally expected. It was just a constant monthly struggle, simply because she lacked a proper system. Eventually, Sarah adopted a digital financial system, and here's exactly how it works. Now, the moment she gets paid, her money is automatically divided up. A portion goes straight to her checking account for everyday expenses, another portion goes to a high-yield savings account for emergencies. And the rest? It's automatically split between her retirement account and her investment account. Her banking app also categorizes her transactions and shoots her spending notifications. By turning saving from a stressful monthly decision into this automatic background routine, her net worth has increased significantly over several years. Now, part 4. Risks and privacy trade-offs, the hidden costs. We have to look at the other side of this. To provide you with these predictive insights, these financial applications have to swallow an enormous amount of your deeply personal data. These AI systems analyze exactly where you shop, how much you spend, where you travel, what subscriptions you keep active, how much you save, and exactly how you use your credit. While this is what makes the service incredibly personalized, it absolutely creates major privacy and cybersecurity concerns. You have to understand what information these platforms collect and how they share it. The incredible convenience of all this should never, ever eliminate your need for real financial security. You still need strong passwords, multi-factor authentication, and careful monitoring. This brings us to what I consider the ultimate maxim for the AI era: automate, then review. There is a major psychological danger in all this amazing convenience. When people automate everything, they tend to just set it and forget it. They completely stop paying attention. You could accidentally automate the wrong payment amount, or keep investing based on an outdated financial goal, or end up with a portfolio that's way too concentrated in just one type of asset. Automation is a fantastic tool, but it is not a replacement for your own judgment. The technology should handle the repetitive tasks for sure, but you, the human, remain responsible for the major decisions. Bringing the energy back up for part 5, action steps for today, the playbook, and the future. As you'll see, the next stage of personal finance is a highly interconnected ecosystem. Instead of having totally separate apps for checking, investing, and budgeting, the future is an intelligent system that provides a unified picture of these 5 core steps. It will look at how your income flows into your expenses, into your savings, towards your debt, and finally into your investments. AI will predictively analyze the relationships between all of these in real time. If your income rises, the system instantly suggests increasing your retirement contributions. If spending goes up, it recommends reducing discretionary expenses. It optimizes your entire financial life continuously. But you don't need to wait for the future to benefit from this technology. So the crucial point is implementing this concrete playbook today. First, automate your saving immediately. Get those transfers set up the moment your paycheck hits. Second, automate consistent investing where appropriate. Third, monitor your accounts for any unusual alerts. Fourth, absolutely protect your personal data and understand those privacy policies. And finally, review your system regularly. Do not just ignore your finances because they are on autopilot. Algorithms can absolutely make mistakes. Markets are unpredictable, and your data is out there. Technology is an incredible tool that can help you make smarter decisions and build long-term security. But ultimately, we have to ask, technology can manage your money, but who is managing the technology? Keep that human oversight, and you will have a massive advantage in building wealth safely in the years ahead. Thanks so much for joining this explainer. We'll see you next time.